welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the opening action, the trading setup and the market strategies you need to follow for this fresh and new week as well. What we'll also start off with is a recap of what happened last week. Remember, it was the Nifty's sixth consecutive weekly decline that we've actually seen. The longest losing streak since March of 2020 that we've seen for the markets. There was a cumulative loss of about 5% over the period, and on the final trading day of the week, the selling pressure had intensified as well. We even saw the markets dragging down by 230 odd points, and the Nifty closed at 24,363. And this was the lowest level for the Nifty in the last 3 months that we have seen. Now, as we start off another fresh week, Indian equities are set for a muted start today again, and that's amidst the mixed global cues that we are looking at. Now, stock-specific action could definitely continue as investors are tracking Q1 results released by various companies over Friday to Sunday. And after the market hours, what we've seen is that Tata Motors and SBI will be definitely among the key stocks that will be in focus post the Q1 earnings today. Globally, how are we seeing the market set up? Well, in the US, the Nasdaq Composite had ended last week at fresh closing highs. The S&P 500 closed on a cusp of another milestone, and the Dow also wrapped up the week on a strong note. At Friday's close, we saw Dow Jones was up by 0.5%, the Nasdaq rose by 1%, and the S&P 500 gained by 0.8%. Last checked, we will also see how the Asia markets have been trading at. So that's a mixed trade. We have been seeing Hong Kong, Hang Seng down by about 0.02%, ASX Australia up by about 0.3%. South Korea's Kospi was also up by 0.04%. Japanese markets closed for the trading session as well. So we have some mild cues and mixed cues coming in. So that's something that we will keep an eye out on as well. And of course, we will be focusing on a whole host of earnings. But let's quickly welcome our guest on board. Mr. Dharmesh Gandhi, Head of Equity Research at Chola Securities, is now joining in for his take on the markets. Warm welcome to you, Dharmesh. Good morning. Help us understand, what's your fresh take after Friday's selling pressure intensified in the market. It was surprising because on the day when extended tariffs were announced by the US, the markets were able to close into mild green, but just the following day we see that selling pressure intensify. So what are the key reasons? How are the markets really maneuvering through what's happening globally, sir?
A very good morning to you, Sakshi, and to all our viewers. See, as far as day before Friday is concerned, it was more of an expiry day, and that day, because of expiry-related, activity, the market ended in the green. Friday, the real, outcome of the additional tariff was seen in the market, and this is coming on the backdrop of when things are not doing well as far as the earnings are concerned. So there has been a double whammy for the market where earnings are faltering in spite of, lower inflation and lower interest rate cycle. And then you have this tariff related issues, plaguing the market. The problem with the tariff is most of the MSME segments will be hurt by this if it goes through this additional 25%. And that can have a cascading impact on the entire, financial market, the NPS cycle, which has seen a slight deterioration, and there is a concern out there. So on backdrop of all this, we did see selling in the market. Having said that, the market again, with this kind of a sell-off, it's poised at a very low, risk as far as risk is concerned in the market. And any single good news can lift the sentiments up from here because not all is lost. So there may be some pockets of the market which can be, deeply impacted by these tariff issues, but there are plenty of other sectors and pockets where a single good news can help soar up the sentiment, and that is what the market is looking forward to. This week we are walking into Independence Day, 15th of August. So any sort of a policy announcement out there, speculating. I don't know whether there is something coming up or not, but there can be some protective measures with regard to the international scenario can happen, or if Russia and US gets some deal through in Alaska meeting with respect to Ukraine. So Ukraine is the contention where the entire, impact on the India additional 25% tariff came through because we have been buying oil from Russia, and this is impacting the financial status of Russia, which in turn is, funding, if I may, also death funding is happening out there indirectly. So if that gets sorted out, then automatically this the very premise of this 25% additional tariff goes away. Still, we would be having 25% tariff on the cars. So this thing will go on, Sakshi. I mean, this is not going to settle very soon. This push and pull of the market will go on. We have to navigate between this. But to my mind, I think this week we can have some upside in the market, and the range bound activity can push through the sectors which we are, very focused on to buy on declines, not on rallies, are very clear. I mean, these are the traditional sectors which we have been banking for 1 year, and those are, infra plays, so both on the material side as well as the direct infra plays from Larsen and NCC kind of a company, followed by defense companies. They are structural long-term play. Some railway infra stocks again comes for wherever government is the spender. Those are sectors we are looking forward to. Metals and select, pockets in auto and auto ancillary. So these are the broad sectors where we are focusing on right now. Others, including financials, we need to check how the market behaves. So not a very clear investment trade as of now. So net, what we are going with this week is a positive kind of a bias on the market, and it will keep on oscillating in this range is what we are getting a sense from the market.
Okay, so Dharmeshi, let's talk about the earnings thus far, and I will come to specifics in the next question. Overall, we are largely out with say 3/4 of the earnings that have already come in from the earnings season Q1. What has been your one or two big key takeaways from the earnings that have come in? Where do you see there are areas of concerns that will need to be watched out for the next quarter as well? Where do you see there are already some green shoots that could convert themselves to good positive earnings by at least the next quarter?
Yeah. So firstly, the area of concerns, one is it was, I mean, bit single digit kind of a revenue and operating profit growth for most of the companies. There were few outliers in the Nifty 50 basket, which pushes the aggregate average up, but otherwise it is 5.5 to 6% kind of a growth.
Yeah.
34% of these three-fourth companies have reported negative growth in the operating profit. So that is one concern out there. And most of the management commentaries, be it con call or otherwise, if you are talking to them or listening to them, so they are suggesting again a cautious approach. They are not very, bullish that Q1 was expected to be, weak. But Q2 onwards, things were, because of interest rate cycle, tax cut and everything playing out, better monsoon was expected to be better on, which is not the case right now. People are still, I mean, having doubts about the recovery, whether it is really Q3 or Q4, that is being debated upon. So this is a broadly which has been a takeaway. However, there are certain pockets where things are much better, like the entire energy space, be it power generators or, renewable energy power producers, and at the same time, people who are supplying like solar modules and cells and all. Those companies have done phenomenally well. Chemical sector has come very well, specialty and the agrochemical space. But again, only the caveat with specialty chemical is most of their exports goes to Europe and US, which again comes into a problem with this kind of a tariff. So we have to see how it goes about. Two-wheelers, select companies did a phenomenal number, be it Eicher Motors, TVS Motor, so those are the pockets where we are focused. Generally, economic barometer, if you see, they are banking as a space where there was, trade cost went up, provisions went up, and there was slippage in asset quality. So that's a concern area. So it's a mixed bag. You have
Yeah.
to focus on certain companies, and let's see how it pans out. Difficult to call it a short right now.
Okay. Let me quickly just look at how the markets have started to take in the pre-open. 24,340 right now. Very, very volatile start. So what we'll do is we'll give it some time. By 9:07, 9:08, when the markets settle, we'll again come to some of the stocks. Dharmesh, you were talking about the auto stocks, especially the two-wheelers. I want to bring your attention, therefore, to Tata Motors, the country's largest commercial vehicle maker, that's reported its results on Friday. Now, we've seen a net profit of 3,924 odd crore rupees. This has marked a decline of 30% from 5,643 crore rupees in the same period last year. Revenue from operations, mild fall about 2.5% to 1.04 lakh crore rupees vis-a-vis 1.07 lakh crore rupees. Now, when we look at the company's operating profit has also dropped by 33%, and the profits, the entire performance largely was impacted by the volume decline in most of the businesses and a drop in primarily the profitability coming in from JLR as the company has really marked out. The stock is also reacting negatively in the pre-open trading session at 625, 630 odd levels. There's already been an 6 to 8 months of a long haul consolidation on Tata Motors. What was being seen as a stock that was getting re-rated and, probably moving to a higher trajectory about a year back has continuously, given all the investors a lot of pain on the downside because it's just not moved and the results now continue to show us some more pain. What will your approach on Tata Motors be, sir?
Yeah, definitely the company is disappointed. And the reason are beyond their own control. I mean, the reasons why the stock price has not performed or the numbers are bad is beyond the control of Tata Motors. Firstly, because of tariff issues, there are too many interrelated and integrated issues which have plagued them. So this number, bad numbers were expected, but it's still, shot up on the downside. Whereas far as the fall in the profits are concerned, around 3-4% extra fall was there, which we were not expecting it to be. But that's a mathematical calculation. So that rounding error can always happen. But structurally, right now, how Tata Motors is placed is the sales are definitely under a question mark because of the higher tariffs being there. And now, with this additional 25% from India, things are not very because there are few components which moves from India, few from Europe, then few from Canada and Mexico. So there are many parts, moving parts out there. So unless this is entirely and totally settled, and anyways, 15% is still a higher tariff than what they were paying earlier. So there is additional 5-7% kind of a burden out there. This has to be mitigated over a period of time. At the same time, they did an acquisition in Italy with Ibisco. So, I mean, again, such a 40,000 odd crores roundabout burden on the balance sheet. And I think the timing is not right as to that when they are going for, restructuring later either by the end of this year or early beginning of the year when CV and PV vehicles are to split. So that's the broad restructuring out there. And that was the call on Tata Motors that things will value unlocking will happen. But the way things are positioned right now, EVs are having their own share of problem with rare earth magnet not being available in abundance or required supply chain is getting disturbed out there. So net, my sense is that if you are a holder in Tata Motors, stay invested because company has bounced back earlier as well from troubled times. I mean, even the acquisition of JLR was not seen that great, but it worked out well for Tata Motors. This is the main revenue generator now. So maybe a year you have to give it a pass for Tata Motors, and then the stock price may starts showing some meaningful traction. Till that time, you have to be stay invested. We are not calling it a sell as of now.
Okay. Not calling it as a sell as of now. Let's look at it as to how it progresses. The good part is that the Nifty is coming into the green in the pre-open trade at 24,378. We'll see how it progresses. The other big earning came in from the banking space. The largest bank that we have, State Bank of India, reported its numbers on Friday, sir. A 12% surge in its net profit coming in at 19,160 odd crore rupees. Now, what we've also seen is that most of the estimates have got beaten on the profits front. As most of the estimates were somewhere around 17,500 and thereabouts for the profit figure. Total income has also gone up by about 10% at 1.35 lakhs. What we've seen is that the NII is almost flattish, slightly down, just 0.13% down at 41,072 odd crore rupees. NIMs, however, have also declined 32 basis points, and that's one thing that we can focus on too. And return on assets have improved, cost to income ratio has improved. On the business front, we've seen gross advances also grow by 11% for the company. Retail personal growth loans have grown by 12.5%, SMEs by 9%, 19%. Total deposits have also increased by 11.5%. So what was your biggest takeaway here? And do you think the marginal pressure that we are seeing on NIMs is not too much of a worry at this point, or do you think there could be one more quarter of a drag there?
See, overall, the numbers are a better set of numbers because in spite of a 32 basis point decline in the NIMs, they were able to hold on to NII growth. So unlike other public sector banks where there was a strong degrowth in the net interest income, so that is one area. The other was the credit cost did not go up so high. It was almost a flattish kind of a credit cost. At the same time, asset quality was maintained. which is stark, sharp. If you see, it's different from the other banking space where the numbers have been largely reported. I mean, two banks have come out with a very good set of numbers in light of how the others have performed. That is ICC Bank and SBI, and these two other largest banking players in the country as of now with SDFC in place. So I think this will give a flow to the market, though there may be one more quarter of, I mean, compressed kind of a quarter where NI growth may not be that high, it may be 1 or 2%. And NIMS may still slip down by 18 to 22 basis points. So that is what we are working on, further slippage in NIMS in Q2. And then from Q3 onwards, things will start improving. There are few banks which have already passed on the larger portion of the interest rate cut. So there the NIM slippage will be around 5 to 7 basis point. But on an average in private sector space, this could be still far higher, and deposit pass on will play out from Q3. So that is what we are working out. SBI seems, I mean, downside is restricted. If you are a short-term even investor and you are playing it for say 3 or 4 months, I think this is the right time to nibble into SBI. Anything between 750 to 800 is an attractive price to get into, and maybe 920, 940 can be upside target. So 10-15% is what we are expecting a return on SBI going into the year end from here.
Okay, fair point. Let me just quickly look at how the markets have settled in the pre-open. The Nifty is at 24,371, just marginal uptick there on the green side. Oil and gas could be clearly in focus, and I will just detail how, and we will be discussing that space also with Dharmesh ji in a bit. 0.3% higher for the oil and gas index. Auto index also showing us some ticks on the higher side. PSU banks, realty, even metals could be higher, but IT, FMCG, consumer durables and broader markets are seeing some pressure in the pre-open trade. Top movers, Grasim, Adani Enterprises, Kotak Mahindra Bank, Tata Motors, Titan could be in focus among the top movers, and among the PSUs again IOC, BPCL, HPCL could be in focus, the OMCs, whereas on the declining side Asian Paints, Coal India, HUL, Tata Consumer Products could be on the declining side right now. And let's also quickly look at how Tata Motors, 0.4% high is what is getting indicated as far as the results reaction is in the pre-open trade. And we are also looking at State Bank of India also opening in the higher zone. Now let's come to the oil and gas story. Oil marketing companies, IOC, HPCL, BPCL, they're all going to be in focus today, as what we've seen is that the government has now approved a 30,000 odd crore rupee compensation for LPG under recoveries. Now, what we are given to understand is some brokerage houses say that this is definitely, lower than the 41,000 odd crore rupees of under recoveries that have been borne by the OMCs thus far. But it remains to be unclear as of now that whether there will be some more compensation made for the rest of the losses as well. So there are some brokerage houses reports. I will just detail that and then we'll come to Dharmeshji's view there. On Morgan Stanley, I said the government has allocated this anticipated 30,000 odd crore rupees for cooking gas related under recoveries with payments in 12-month installments. This implies policy stability via ad hoc nature of payments still remains a challenge. Now, they believe the subsidy should delever fuel retailers' balance sheets by about 12%. More importantly, it highlights that the consistent 14 to 15% return on capital employed vis-a-vis the oil price cycles is being seen. Now, Morgan Stanley prefers HPCL, BPCL among the refiners, while cooking gas recoveries increase risks of fuel price cut. It seems a limited impact for a 1 to 2 rupees litre price cut there. Jeffries has said again, it's a major positive development for OMCs. It says even though it is lower than the anticipation of about 41,000 odd crore rupees, it will boost the earnings of OMCs sharply. It added the companies are continue to benefit from the inflated market margins amidst on the auto fuels as of now. So those are two big brokerage reports that we have. Dharmeshji, explain to our retail investors and viewers, how do you read this for them, and does it throw any opportunities to buy afresh into this space?
Actually, it's a probability game. I mean, as long as under recoveries are there and you are dependent on the government to, suffice that under recoveries, how do you value a company? It can be 20,000, it could have been 41,000 odd crores, or it could have been 50,000 odd crores. So you never know. You can just guess and, come out with a tentative figure. Okay, these are the under recoveries. You put up a demand to the government, and that has to be, you just look up to them when this is going to come through. So there's a time lag as well, and there are, working capital cycle costs involved in that entire issue. So this is part one of the story. Part two is this: as long as this is not a free market kind of a economy, you cannot actually value all marketing companies. It's just on the replacement cost basis where you see the difference, and then wherever the gap is too high on historical averages, a buying opportunity emerges out there, and then things play out to them because government has been, pumping them up with all the under recoveries, which through subsidy and all. At the same time, there is another hanging sword called excise duty. So it comes in and goes away at the whims and fancy, and depending upon how the fiscal math of the government is working around. So these are the challenges for this company on a operational or execution level. Structurally, refining will go down the line. I mean, as we move forward into say 10 years, 15 years from here on, with renewable energy taking further, space into the day-to-day life of all of us. So this is on the down cycle. So to our mind, if it's as a going concern kind of a business is concerned, it may be there for 25, 30 years, but it's a sunset kind of a sector, largely with the capacities which are already there in place. And these operational issues keep on playing in them. So if it is beaten down and then such news flows are coming, and there is some, technical trigger or some value buy emerging, you can still buy. But that's the very reason why we have not been subscribed ever as an investment buy to any of the OMCs. Having said that, it may still offer you a day or two day kind of a trigger for a buy on the upside, and crude oil again plays the other vector out. So whenever crude oils are down, so then the under recoveries are likely to be less, then it becomes a natural play.
Okay, got that. Let me also welcome on board Vaishali Parekh, Vice President Technical Research and Analysis at Prabhudas Leeladhar, joining our panel now. Warm welcome, good morning to you, Vaishali. Good to have you with us at the start of another week. 2 minutes to markets opening. What is your sense? How are you going to play this one on the Nifty Bank today?
Very good morning, Sakshi and Dharmesh and all viewers. Yes, the market has been very choppy, and well, we are still looking at a downward trajectory. As per the levels that we are talking about, I think we are seeing a good support at 24,250. If those levels break, then we are looking at further downside, perhaps towards 24,000 levels. So for now, for today, let's take 24,250 as support, and market is well quite flat right now. So we may see some bounce coming in, but we also need to see Nifty crossing 24,650. So for now, I would observe a range of 24,250 to 24,650. And Bank Nifty also is showing some weakness. So I would say 54,800 on near-term basis as support, and look for a bounce up to 55,300 levels. So that is what I would look at right now.
Okay. Any two stock ideas that you could suggest upfront?
So I would say, on basis of last week's move, what we witnessed, Indian Bank continued to be in an upward strength, and I think it should continue to do well. So current market price is at around 650 levels. I think 630 is a good support level, and this can go towards 680. So this is one of the stocks which is in a good strong uptrend, and the other one that I would look at is Delivery. Delivery also has given a weekly breakout, and we have seen a little bit of a retracement coming in. I would say rather buy it at a little bit of a dip with 440 as support, and look for a target of 485 to 500.
Okay, markets have started to tick flat with a negative bias right now on the Nifty. PSU banks are the ones that are, doing well right at the open, 0.5% higher nearly. Oil and gas about 0.3% up. Infra is higher. Metals are also up. But India VIX 5% higher, 12.6. Keep an eye out on the volatility index right now. IT is a drag. Consumer durables, realty, and even the broader markets have opened on a back foot. Top movers on the Nifty are Grasim, 3% higher that we can see on this one. After we have seen the earnings come in, that will be the next one that we will discuss with Dharmeshji and Vaishali both. State Bank of India, 1% higher. NTPC, Adani Enterprises, Trent, these are the top movers. On the downside, ICICI Bank, BEL, Adani Ports, Asian Paints, Tata Consumer Products. Let's look at the oil marketing companies which we discussed. HPCL, IOC, BPCL, these are the three top movers on the PSU index. You're also looking at NTPC, HAL, Power Finance Corporation as higher. Now, when we look at the F&O space, there Grasim was up by about almost 2.5%. Again, the top mover there. IOC, HPCL have been the other top movers there. On the declining side, PG Electroplast. We should definitely discuss this one. That continues to drag from last 1 or 2, 3 trading sessions. 8.5%, 9% lower. Voltas, Amber Enterprises are the other stocks that are declining now. Let me quickly go to Dharmesh ji now. Dharmesh ji, let's talk Grasim and let's talk the cement space at large. We did see for Grasim a 32% increase in the consolidated net profit that came in at 1419 odd crore rupees. Revenue from operations also increased by 16%. We've seen the EBITDA also grow strong by about 37%. How are you looking at Grasim within the entire basket of sector that we have right now, the performances that have come in and what are likely to come to?
Yes, actually, as far as Grasim is concerned, the bulk of lifting was done by Ultratech numbers. So
Yeah.
other businesses are okay types, and basically the viscose fiber did not do well to that extent. So there's a structural, it's a conglomerate, it's a holding company kind of a company. So we are not very, focused on Grasim as such, because there are people who are having value unlocking through paints and all. They are valuing that company on that basis, but we are giving it a skip as of now. As far as cement space is concerned, I mean, though the numbers were very good for Q1, and Q2 is expected to be, slightly lower than what the Q1 volume growth numbers were if you look on year-on-year basis. So we are going by 5 to 6% kind of a volume growth for Q2. Q3 is when things should start playing out. At the same time, our dealer check does suggest that there's a pricing pressure as far as cements are concerned. So they were able to take 10 rupees, 20 rupees kind of a price hikes in Q1. But again, there is something called equity equalization or premium equalization kind of a method where it gets passed on back to the dealers after a month or so. So that is where the Q2 numbers looks to be a bit difficult. So Q2 would be more of a consolidation phase for most of the cement companies. It is Q3 onwards, if the activity on ground level picks up, then we would be looking deeply into that. As of now, I think price action is also suggesting the same. It's not being a trending price action on most of the cement companies. It's oscillating within a range. So as of now, we are keeping it on the radar, but not going all out for buy calls.
Okay, we have to thank you, Dharmeji. So before I let you go, I also have to ask you on the IPO space, because again we are going to be seeing 2 more IPOs open up. We already have 2 existing ones that are open as well. So JSW Cement is open, Bluestone opens up today, a 1540 odd crore rupee IPO. Regal Resources also opens up today. That's a smaller IPO. How would you really look at the IPO space and what catches your attention among the new ones that are hitting the D Street?
Sakshi, all the three I have been through, but none I found interesting. I mean, Regal is a commodity play on starch, and most of the companies has not been doing well. As far as JSW Cement is concerned, I mean, the pricing is fairly high. Had it been at 15-20% lower than what the pricing was, it would have been more attractive. But because of promoter pedigree, it may still get a good listing, no doubt about that. But the markets where their focus is Southern India and likely to be in Eastern India, the entire capacity expansion is coming out there. So that's one area which is already challenged as far as cement volume utilization and pricing is concerned. Ultratech is a larger player out there in both these markets. And the third factor about a concern about JSW Cement is the clinker to grinding capacity. It is 40%. Normally 65-70% is the norm. So that means they have to buy clinker from the market. And it both ways, at times it may work in favor, but otherwise, if the environment is good, clinker will price higher, so your margins get suppressed. And if the time is bad, again, then you are buying clinker, but the pricing is not there in the market at all. So it's a challenge out there. It's a loss-making company. They have made a turnaround, definitely. But we have given it a neutral to a pass kind of a listing. It may still open up because of the management pedigree out there. But we'll see. I mean, let it perform for 2, 3 more quarters, then we'll see whether it makes buying attention from our end or not.
Okay, got that. Dharmeshi, thank you so much for being with us then on the
Thank you
program
so
and
much,
helping
Sakshi.
us with all your views. Always appreciate your presence. Thank you. Hope you have a great week ahead. We'll see you soon. Now, Vaishali, let me come to you. First, if you could help us understand your key strategies on some of the stocks that are taking a reaction on the earnings front. One is Grasim that we just discussed, now 2% higher, top mover. Would you, carry on with the momentum here?
So, well, let's see, Grasim, it's continuing to be in an upward trend. So, I would say take today's low as stop loss, and this can go towards 28.20 to 28.50. That is how I would look at it because volume has been good in the previous week and we've just begun. So, I think one can take this stock with today's low as stop loss.
Okay, let's talk State Bank of India, 1.5% higher post earnings. PSU Banks is the index that's also leading among the sectors today on the back of SBI earnings. What would you do with that?
So SBI also, Sakshi, actually nothing has been happening since quite some time. And 780, 790 continues to be the support. So I think let's wait for this to go above 830, 840. So till then, I would just observe a narrow range. 830 has been a very tough resistance. So for now, I would expect a bounce up to 830. The actual strength would be confirmed only above 830 levels.
Okay, got that. Let me also ask you on Tata Motors. That's the third one that we have watched out after the earnings come in. What goes next? The stock is about 0.5% higher. Does it give you any sense of confidence of the stock returning to higher levels, or is it going to be a consolidative, long-term, painful period even now?
Not really. Actually, this has been quite a disappointment. Every attempt of an up move, it then is followed by a good corrective move. So right now, well, only consolation is that it is at a support of 630 on a moving average, 200 period moving average, and I would say maybe we can expect a bounce. But I think seeing on last week's move and all, I think focus should be shifted more towards the two-wheelers, that is Hero Moto, Bajaj Auto. Those are looking promising. I would focus more on those.
Okay, got that. So the market breadth is improving, viewers. You can see 24,416, about 53 points higher in trade on the markets. PSU banks, the index is up by over 1.2%. Metals are shining brighter, about 0.5% higher. So commodity play is definitely hovering higher. Oil and gas also up by nearly 0.5%. Then you also have some, uptake on the banking front, especially led by the financial services and PSU banks both. Then we have autos, realty, and even the broader markets are now showing us some tick on the higher side. Only it's consumer durables that seems to be declining at the moment. Let's talk about consumer durables then. Vaishali, what do you think is creating a weakness in this space, and how would you look at some of the stocks? Are they in your avoid list right now or accumulate?
I would say avoid for now because it is in a corrective mode. So let's wait for some stability.
Sure, let's wait for some stability. I think Voltas is the one that is continuously declining post the kind of earnings also came in, and we have been seeing that the stock has been inching lower. Now it's among the top losers in the F&O space as well today. Among the top losers are PG Electroplast, Amber Enterprises, Voltas, Siemens. All of them are down. Most of them are capital goods. Some of them are EMS plays as well. And of course, Voltas we all know is the white goods player. How would you look at some of these stocks then, Vaishali? PG Electroplast, why do you think the pain continues 10% lower? Now this was one stock that had catapulted higher in just about 3-4 trading sessions. It had gone up quite a lot. Most of the gains have already been wiped out. Even today it's now down by 9.9%, almost a 10% lower circuit. How would you look at it?
I would say, well, it is showing weakness. And if this continues, then I think this can go further towards 400 and 350 levels. So in this category, only stock which is holding a good trend is Bosch. If you look at Bosch,
Yeah.
Bosch is doing well. And in capital goods, if you ask me, Cummins has come with good results and it showed strength. So these two stocks are still better off as compared to the others.
Okay, so if you have to look at consumer durables, then Bosch is a good play that one can definitely look at. Cummins is another one, but PG Electroplast, remember viewers, on August date 8 or so also, the stock had already tumbled 23% after the firm had slashed its FY26 growth guidance. The Indian Electronic Manufacturing Services that specializes in the original design manufacturing and original equipment manufacturing for consumer durable brands is facing some kind of a growth hurdle there. Net profit for the company in Q1 fell by 21%, revenue rose by 14%. On August 8, PG Electroplast closed by 23% lower at 567, and now you can see a 529 level coming in again. So the growth guidance has been revised to 17 to 19% for the fiscal year, as against a 30% guidance. That's a sharp markdown of the guidance that the company has given on the growth front, and therefore you see consistent decline on the stock there. Even Amber Enterprises is coming under pressure, 5.5% lower. Siemens is coming under pressure as well at this point in time. Let me just now look at some of the other buzzers. Suzlon Energy, after a long haul, is showing us some ticks on the higher side in the F&O space. Vaishali, do you think this is promising?
Well, so technically, purely on technical parameters, 63 acts as a good support. And today's candle shows some positive movement. So I would say, while keeping 62, 63 as your support levels, look for the stock going towards 68 to 70. The trend that we would expect it to show would be only above 70. So right now, I would say it's just a range bound. It has been in a long consolidation. So 62 to 70 would be my levels to watch.
Okay, got that. Let me just quickly also look at what is the key moving part that we can focus on. Now, PSU Banks as an index is up by 1.5%. You talked about Indian Bank right at the first go, Vaishali, today. SBI we have discussed. Even beyond these names, do you find anything else interesting in the PSU banking basket now at the day's high, 1.5% up?
I think Union Bank also looks quite promising. So yes, I
Okay.
think they should do well.
Okay, fair point. Let me also pull up. I think real estate is also doing well at this point in time. Anything within the real estate basket that catches your attention afresh?
I would say it would be just a bounce back because we saw good erosion last week. So right now, well, there is no clarity, but it could be just a bounce back.
Okay, just a bounce back. All right, we'll focus on that. Let me also focus on the OMC space with you, Vaishali, oil marketing companies, IOC, HPCL, BPCL. There's been a positive news development with the government, compensating for the under recoveries, about 30,000 odd crore rupees, although the losses still remain because under recoveries were to the tune of 41,000 odd crore rupees. But most of the brokerage houses are seeing this as a positive development. They also feel this should help the company's profitability and aids that in the coming quarters as well. What would you say?
So well, I would just take it as a trading strategy because right now it's too early to say. We need to see some continuation in the upward move. So for now, I'm looking at HPCL 400 should be the support. If the stock moves above 420, 425, I think we can look for the next target of 440. So this is how I would be looking at all these stocks. Make a very gradual evaluation.
Okay, fair point. Let me also just quickly look at some of the other aspects that we can track. Okay, metals for instance. Vaishali, anything here in the metal space that looks positive, or do you think this is just a bounce back again?
Too early to say, Sakshi, because right now we don't know. We are not even clear about Nifty. So if market has to witness further corrective move, this too can go under pressure. But right now,
Okay.
what I'm looking at is Bharat Dynamics, Mazgaon Dog. They are picking momentum. So purely on accumulation levels, I would say these are good levels to go for.
Okay, let me also pull up one of the recently listed stocks, NSDL, IPO that made its debut last week. It's up by about what 6 odd percent in trade today. 1376 kind of levels are being seen on this one. So strong move there for NSDL. Keep an eye out on this one as well. Let's also pull up CDSL in that matter and focus a little bit on the capital market stocks as well. Vaishali, could you look at the entire list of stocks, BSE, CDSL, NSDL now with the limited data that you have, and across the board, what is actually looking good for this fresh week?
Well, so BSC, I would still say it's a bounce back. It has shown good corrective move. So we'll wait and watch, but yeah, good level to accumulate. Even CDSL, I think, even if there is a further dip towards 1480 levels or something, that makes it an attractive buy. But as we had spoken even sometime back, MCX still continues showing strength. The trend is still intact. Let me just see how it is this today. Uh, yeah, so this is still continuing to show strength. So I would say yes, this would be the stock which has got a clarity. 7,500 is the support. We've seen the regular consolidation, and then from here on, if we see the stock going above 8,000, we will see a new round of momentum setting.
Fair point. Okay, we'll keep that in focus. First 15 minutes of the candle is already formed, Vaishali, but the market is again very, very volatile. How are you looking at it?
I maintain my bias that yes, it's a sideways move right now. We would see if we see Nifty getting back into the red, this can go towards 24,250. So I'm not very gung-ho about the support levels right now. The trend is down.
The trend is down as of now. Okay, we'll definitely keep that in mind. Let me also pull up a few more other pockets. Let me look at the Nifty 500 names. If there is anything interesting that we can really look at it here, I think it's tourism space that's actually getting into focus. Some small hotels and spaces like Yatra Online, that's also getting into focus. Some Blue Coast hotels, Asian hotels, some small hotel companies are hovering higher. You also have Andhra Sugars, Sangvi Movers, then names like even MIRC Electronics, that's bucking the trend in an otherwise weaker setup. Apollo Microsystems is higher in trade among the top movers in the Nifty 500 basket. Those are some names that I just looked at. Anything interesting in the Nifty 500 that you may want to highlight, Vaishali?
No. I'll wait for some more time.
Wait for some more time. That's the best way to really look at, let the market settle, because look at it, within the first 15 minutes we've gone up 50 60 odd points, come down 2 3 odd points as well, and we are very, very volatile at this point in time. Even India wicks, that's higher by 5% at 12.6, so the volatility index is higher again. Apart from consumer durables, IT is falling, FMCG is now cracking a bit, small caps are now seeing some cuts as well. Adani Group stocks are, however, looking positive. I feel Adani Enterprise is the ones that is hovering higher, but I think there is also some contradiction. Some of the stocks are also lower. On the Adani Group stocks, is there a fresh strategy that you have, Vaishali?
No, I'm not too sure about Adani Enterprise, but if you look at Adani Port, the trend is good. I mean,
Acha.
we may see further downward momentum, but I would say 1250, 1280 makes it a good buying level to get into the stock. So also is the case with Adani Green, Adani
Yeah.
uh, all these stocks are at good levels. So good levels to accumulate. That's the only way, because actually, as I said, market is too volatile. So trading gets a bit difficult, and we are not sure whether we are seeing further erosion or no. But technically, I would say good level to start accumulating these stocks, because I think it's at a fair value.
Okay, let's look at some of the other pockets then. Vaishali, within the cement space, apart from Grasim, also are you looking at any cement player?
So, well, Ambuja has been the one which we constantly look at, because that's still holding on with its uptrend. So, also is the case with Ultratech Cement. I would go slow and steady on these stocks.
Okay, go slow and steady on this stock right now. Trent is seeing some buying today after some time. Any suggestion on Trent, the Nifty stock? Any movement here that what should be looking at?
Yes, so I think, I think we spoke about it last time. 5,000 was a make or break level. So this is what we are saying, that yes, it's a bounce back, perhaps going towards 5450, 5500. The clarity that the downside is done would be above 5600 levels.
Okay, fair point. I hope this is also given a lot of understanding to our viewers there. Let me just look at any other pocket. Last week, Vaishali, defense stocks were showing us some uptick. Even today, Apollo Microsystems is higher, and some railway stocks also were bouncing back. Again, railways are also showing some tick on the higher side today. So also the defense index is up by 0.6%. Any fresh buys that you would want to initiate here?
So yes, all these stocks actually, whether it's Jupiter Wagon, whether it is uh, RBNL. I mean, all these are good levels to look at these stocks. So I think, yes, once we see market stabilizing and once we see this sector again showing some buying interest, I think this will give good returns.
Okay, fair point. I hope this has also given some understanding there. Let's discuss pharma, which we haven't discussed. A lot of pharma related stocks have also been in focus. The one that came on with the results is Wockhardt Pharma on Friday. It has actually reported a widening of its consolidated loss after tax at 108 odd crore rupees. That was hit by an impairment due to liquidation of subsidiaries in the US after exiting the generics business. So the stock is seeing some pressure right now. Apart from this, the pharma index is just slightly into the green. Although last week we had seen a lot of action in the hospital related stocks, Fortis, Max, those were the stocks that were higher. Within the entire pharma and healthcare pack, do you also believe, Vaishali, it's the hospital stocks that could probably give us better risk rewards and better, momentum at this point in time?
I do agree because, those are not really impacted by the tariff that we are going
Yes.
through. So, of course, I think these stocks are comparatively safe. So, whether we talk about Fortis or Apollo Hospital or the other one, Kim's, etc., they are all in a trend. And Apollo Hospital once again has come to a corrective move. So, I think 6,800, that is a good level to start buying again.
Okay, fair point. I hope this has also helped you out get an understanding of the same. Today on the defense space, Astra Microwave is higher by 3%, GRSE is up by 1.5%, Solar Industries is up, Mazagon Dock, BEML, Paras Defense, these are all the stocks, and even HAL is higher. Anything from the defense pack that you'd like to pick?
So, as I
Shipbuilders
said,
maybe?
yes, so Bharat Dynamic, whether HAL or Moscow Docks, etc., they are at good levels. But having said that, if market still witnesses some corrective move, some more further corrective move of 2 to 3%, then these stocks also cannot be ruled out. So I would
Also.
say accumulation would be the best strategy right now because if you see the long-term trend, that's pretty much intact. We are just seeing some profit booking for now.
Just seeing some profit booking. Mixed trade on the broader markets front. Mid caps are higher, small caps are lower. Within mid caps, what Vaishali took the name of Indian Bank, that's the top mover, 2.2% higher. We are also seeing Ashok Leyland pick up some pace now, viewers, 1.9% up. Suzlon is also higher in trade. PB Fintech is moving up. We are also seeing some defense name stocks that we just marked out for all of you. And, names like even Hoodco, that's buzzing in trade within the mid cap basket. Anything from the broader markets that catches your attention right now, Vaishali?
The other stock is NCC. I think
Okay.
that is also in a good momentum, and I think it's done with its corrective move. So this is another stock which one can look into. Um, yes, it's getting into a trend. So I would say 200 acts as a support, and trading target we would look at 240 for now.
Okay, got that. Let me just look at a few more pockets that are buzzing. We are also looking at some finance names like Home First Finance is also higher in trade right now, 4% up that we are looking at. Some of Sundaram Finance, of course, from the larger ones, which always Vaishali also looks at. That's buzzing. Within the NBFC basket, anything, Vaishali?
I'll wait, Sakshi. I'll really wait
Wait.
for some time.
Sure.
Yes.
Swiggy is, I think, getting into momentum, 1.5% higher at 390. We haven't discussed Zomato and Swiggy for a fairly long bit of time. Any suggestion here?
So I think Swiggy is now comfortable at these levels. I would say that keep 380 because we've seen after seeing a good dip at 300 levels, it's again getting into a trending mode. And now with a consolidation and a good support of 380, I think short-term target looks positive for around 400, 410. and we can have a relook from there on. And as far as Zomato, which is now Eternal, I think that is right now of course, done with its consolidation. So as long as we see a support of 290 maintained, this can get into further up move as well.
Okay, fair point. All right, viewers, we'll just quickly now look at, some of the other pockets that are declining. Okay, IT is declining. Vaishali, we haven't focused on that one. Does it continue to consolidate, weaken from here? What's your strategy on the IT pack on the losing side?
So I think if market were to correct furthermore, which can be quite a likely phenomenon, I think we can see some more corrective move coming in the front line. So though they are showing a lot of correction, but I think there is scope for further on corrective move.
Okay, fair point. I hope this has also helped all our viewers out and get a clear view there. Let me just quickly look at, so okay, Home First Finance, remember viewers, I was marking out, that's also in focus because shares worth 1307 odd crore rupees have exchanged hands in a clean out trade that may have happened. That's something that I'm given to understand. Orange Club Investments BV that held a 10.64% stake in the company at the end of the quarter is what we are given to understand is involved in this. As many as 1.09 crore shares of the company or 10.6% stake of the equity exchange has already happened, and that seems to be Orange Club Investments, and that's why you're actually looking at the stock in focus right now. So just wanted to highlight for you the key reason why the stock has gone up in trade today. Let me also pull up a few more other pockets for Vaishali to really look at. Power space, which we haven't touched base on. Anything within power space, Vaishali, say power grid or PFC, REC, NHPC, NTPC, what will look good here?
I don't think so because just see Nifty is not sustaining at higher levels.
Yeah.
So I think let's avoid it because well, even if you talk about REC or power grid, etc., they are below all the moving averages. So I guess some more corrective move can happen. So not for now.
Not for now. Okay. Let me just quickly now help all our viewers, wrap up the morning trading action and first 15 minutes, first half an hour candle that Vaishali can read out for us. Let me just quickly mark out for all our viewers what to watch out for. PSU banks, that's where the buzz is today, 1.6% higher. Real estate picking up pace, half odd percent higher. Metals 3/10% up. Financial services 2/10% higher. And just about slight ticks on the private banks, autos and oil and gas. Consumer durables are facing a 2% decline today, largely led by PG Electroplast fall. That's now down 15%. That's another circuit that we are seeing on this one as well. So you are seeing at the day's low point, PG Electroplast 7% lower for Amber Enterprises, Voltas down by 6%. So consumer durables is clearly under pressure. FMCG is also seeing a cut of 0.4%. Small caps are down 3/10%. Mid caps now flat with a negative bias, and pharma also down in trade. And IT we've already marked out, which is already on the declining end. Let me just mark out for all our viewers top movers on the Nifty: Grasim, SBI, Trent, Adani Enterprises, and Tata Motors. Declining side, Titan is weakening, 1.3% lower. Hero Moto, Apollo Hospitals, ICICI Bank, and Nestle are the top declines. Whereas on the F&O space, K Fintech is now picking up pace. Ashok Leyland is another one. Grasim, SBI. On the declining side, we've already marked out for our viewers. Let me quickly ask you, Vaishali, if you could let me know on Titan. What is your suggestion? How are you looking at this one? Again, it's coming under pressure because of the entire consumer durables and the consumer sentiment that's weakening. Any suggestion on this one?
So Titan, well, nothing really as such. The trend is good. 3300, we are seeing a cluster of support levels. So 3300 is the level to watch. As long as we see that this support is held on, I think this will gradually go towards 3600, 3700.
Okay, fair point. First half an hour candle out. Is it looking a weak Monday to end with as well today, or can it bounce back? What will you look at? Is there any trigger that you could look at?
Well, I would expect, I would be very hopeful that it bounces because we have seen a good erosion. But,
Yes.
well, we need clarity. As I said, if 24,250 levels break, then we are heading for further downside. And most of the front line, they are still not coming towards support levels. There is high probability of these stocks getting into deeper correction. So, well, chances are more of a further corrective move.
Okay, fair point. All right, Vaishali, we'll leave you at that then. Thank you so much for being with us in the morning edition and helping us navigate through the market moves. First half an hour really was dealing with a lot of volatility, viewers. We have seen the markets now just about trending below 24,400 odd mark. So high levels not getting sustained as of now. Even Vaishali feels that there is a hope that they should bounce back, because we've seen 6 weeks of a negative move on the market. So enough and more that has already got eroded. But what will be the key trigger that will lead the markets into a positive trajectory from here? Remember, domestically, the earnings, had an opportunity to present to themselves, domestic strong, opportunity for the markets to bounce back. But that is not happening. And that's also adding on to the pressure that we are seeing across the globe as well, since global uncertainty continues to be a big overhang on the markets as well. So what we'll do is we'll wait it out and watch out for how the markets really shape up in trade. Whether primary markets are actually giving you a better opportunity to enter is something that we will also discuss at 12 noon with helping you understand about the 2 new IPOs that are opening this week and what are the opportunities that exist. Remember, the last week's IPO, NSDL, is now upwards of 1400. Another 9 or 10 odd % of a move has actually been seen today. So the IPO space is getting into focus. We'll have to see how that one is shaping up. Stay tuned with us on Market Today and on Business Today television. Throughout the day, we'll cover for you all the market moves, and of course at 12 noon to answer all your questions on daily calls. Stay tuned for that.
Good evening once again, and a very warm welcome to what I'm very interested in as a topic. Building a company out of India, and in fact, the session before that also relates to this, that will be a $1 trillion company. Now, that's just to capture the head